exclusive segment, Worth It, where we bring you investment tips and advice from some of America's top money managers featured in Worth Magazine. And with us now, Mark Germain, CEO of Beacon Wealth Management. Mark, welcome to the show. Everyone's doing really well right now. Do you feel that there's a lot of pressure, more pressure on you as a professional money manager when the market's going up like this? Are people unrealistic about the returns, and how do you react to it?
Well, that's a great question. Thanks for having me in, because I love talking about this. Clients always want to be in the market when it's doing great. Right. They never want to be in the market when it's going down, and they can't understand how you could possibly have anything in the market when it's going down. So yes, there is a tendency to have unrealistic expectations. What we do with all clients is try to set the bar as to what is realistic going forward.
Well, what is realistic?
Yeah.
On that note, what is realistic? And by the way, I have people who will stop me on the street and say, Charlie, I made a lot of money on this particular stock. It might be a stock that went from $1 to $3. I say, that's great, fantastic, but did you ever consider the risk? Now, when you're dealing with people with at least $1 million, that must play a bigger role with respect to how they want to approach this market.
I think it's important is that you hit on something that is critical with people, is that they don't recognize what the risk and the volatility of one investment versus another is. So explaining to them that the market has a risk level of 1. This security has a risk level of 2. Means it's twice as risky as the market. Are you willing to take that risk? So in our portfolios, what we do on a quarterly basis is we show the client what is your risk relative to the market. And that allows them to understand if they did a little bit less than the market, well, I was less risky than the market.
Mm-hmm. Mark, however, people want to grab the easy money when they can, and so they want the most return for the least amount of risk. Is there such a play that still exists? Is there money on the table still to be had, even though we've seen the best 5 weeks that we've seen, all year, much less the best start to the markets in many decades?
Well, I would have liked to have bought Apple at $475. And everyone.
What about 200?
Yeah, as we had clients that had it at 200, and they're saying, well, now it's 600. So yes, there's always opportunities in the market. There's always a play, and clearly, when you take a look at what happened towards the end of last year, starting to make the move back into emerging markets was clear that there was an opportunity there. Energy.
So what is jumping out at you right now, then?
What is jumping out as an opportunity that there's money to be made? There certainly was, in the last few weeks, getting back into Latin America and riding even and from a risk perspective, riding consumer staples some. Clearly, as an economy expands on the middle class sector, the consumer staples are going to go up. Well, they were down in Brazil, so we bought them.
Now, speaking of risk, last year everyone piled into bonds, they piled into utility stocks. They actually did very well. Is there need to be, do they need to stay in those particular areas, or are you guys starting to come out of those just a little bit?
It's one of the things you have to really look at is volatility. So volatility is now at an extremely low point. Those securities that you talked about are defensive securities.
Right.
So utilities are defensive. Is your belief that volatility is not coming back? Well, if it's not coming back, then you should toss those aside.
What's your belief?
My belief is volatility is absolutely coming back. Volatility is mean reverting, and it's low now, which means it is going to come back to its average. So volatility is coming back.
I'm getting a rap signal, but are you suggesting this is a false sense of security we're in right now?
I don't know that it's a false sense of security. I think if you think of the market as a secular bull market, you're going to have periods of down and up.
Okay.
And the key that our clients look for is, can you make sure that where I was last year, I'm not going to be less next year?
Capital preservation.
Yeah.
Mark Germain, Beacon Wealth Management. Thank you very much. Really appreciate it.
Thank you.
Well, still to come, the housing recovery has been moving in slow motion, but one area is starting to pick up a bit. We're going to have the details coming up next.